one thing, John, is I do want to point this out because, despite still having an overall very powerful trend at the index level, I think the index level, or rather the headline index, is masking a little bit of kind of what's going on under the surface. Of course, we've talked about some of the momentum names getting swept up with a lot of selling pressure lately. Amid people being a little bit more skeptical about valuations. There's other pockets of the market that are seemingly almost in full-on bear markets. If you look at certain sectors, kind of some of the consumer-facing stocks, you talk about the staples. A lot of those sectors and stocks within them are really, really having a tough time, particularly housing too. Those stocks, they had a bit of a bump earlier this year. Then rates, long-term rates really didn't come down. They've not been performing quite well. So, looking at some of the market internals, we've had some pretty narrow breadth days. Even in the past, couple of weeks when we've been breaking out to new all-time highs, the breadth across the market was really not all that great. And you can see that right here, John. This is a chart of just the percentage of S&P 500 stocks that are actually currently trading above their 200-day moving average.